Yep.
Hello, everybody. Wade Comeaux with Catalyst Funding, and very excited to have a usual partner in crime, Jeff Johnson, and then also a more frequent guest recently for sure, Derek Campbell. Derek, welcome.
Thanks for having me, guys.
Welcome, Derek. Always.
For those of you that do not know, Jeff and I are the leaders of Catalyst Funding, and give you a little bit of background on Derek. We work with him and his team a significant amount. He is an investor himself, as well as a very active and successful wholesaler. Um, his group, in my opinion, is a little bit unique in that they are really passionate about relationships. Some wholesalers are a little bit more transactional. His team is very passionate about having deep relationships with successful investors and helping them achieve their goals. And I think not looking at each individual deal as just an assignment fee or a double close fee. They're really passionate about helping everybody succeed. So that's one of the reasons we love working with them in their group. But Derek, tell us a little bit more about your team and what's going on at the moment.
Yeah. Well, to back up, I've been wholesaling in Houston since I think 2015. And then we kind of switched over to becoming active investors ourselves, flipping, holding, renting. I've done a little bit of everything other than some subject twos, even though I kind of understand subject twos. And so my partner, my wife and I, Kat, we flipped 150 homes over a 2.5 year period, and then decided that we were going to kind of switch back into the wholesaling model and switch that up. So we kind of slowly been building our team up that way and expanding, I guess, our footprint over the last couple of years.
Yeah, very good. And so real quick, we're going to go over a couple other quick things. We do have a quick disclaimer. We are not giving you any investment advice today. We're going to give our opinions and analysis of a lot of data that we're going to cover. But Derek and Vicina, nor Jeff or I are giving you any investment advice, nor are we responsible for any losses or damages that may be incurred. Next slide, please. All right. A little bit of quick information on what Catalyst does. We are a one-stop shop for hard money and permanent financing. We offer both conventional and DSCR refinances. We've been involved in thousands of transactions over the years. We're very passionate about our five-star customer service rating. And we also provide financing not only for your non-owner occupied properties, your investment properties, but also for your owner occupied properties. And what a lot of people are doing right now is getting cash out either on their investment properties or even their primary residence to fuel their real estate investment goals. And we have excellent DSCR products. If you're not aware of exactly what those mean, those are no income documentation loans. So that if you're a full-time flipper, or if you just don't have very great documentable income, but you want to be a landlord, you want to own properties to build wealth and cash flow, we can help you with that with a DSCR product. And if you are looking for someone to help you out to find properties that we can finance, Derek and his team are an excellent option. We'll give information at the end on how to reach them, but you should definitely consider them as one of the groups to add to your team to help you be successful in real estate. Next slide. So Derek, I know you're based here in Houston, been here for quite a while. Tell us beyond the numbers and in the numbers, what are you seeing right now?
So I think I was kind of doing a little bit of research before today and trying to kind of put together, I guess, a synopsis or an overview of the market because it's essentially just stabilizing since 2019. Even though the rates are a little bit higher than they were then, the number of pending sales is going up. So with the number of pending sales going up, it's not to the point where it is a like a buyer's frenzy yet, and it's not really to the point where it's like a seller's friendly. It's kind of like a middle of the road market right now, and it's kind of really market in specific of the specific areas that you're looking at. So just from the wholesaling end, our stuff is particularly selling quickly in the Cypress, Katy, the breadbasket areas that investors are at under 400K. However, I have been seeing some of the higher end stuff actually being a little bit insulated, and this stuff is going quick too. So stuff selling over 700K in some of those flipper areas, and then a lot of the new build stuff. There's a lot of new build activity. So just from our perspective and what I've kind of just been seeing, it's just really stabilized from year over year, and it's a good time to be from our perspective, because I try to train our guys to be a little bit more market experts, so we can kind of sort through the deals and find the deals that are attractive. And you just got to be a little bit more specific on your pricing and make sure that you have put a good product on the market. So
Yeah. Yeah. I would agree with that. I think we have one particular investor who's really good at doing those, flips up into the range of a little bit below a million, 700,000, 800,000, and just does a fantastic job at it. They fly off the market. She consistently gets above market price. I'm not saying I recommend that as a strategy for every investor to assume you're going to get above market, because you have to put out a fantastic product in order to do that. But it is happening, and there are very successful flippers right now. On a side note, I actually had a friend who has told me that he's been beat out on 7 consecutive offers in West U. Now that's a much higher price point than we're talking about right now, somewhere in a 2 million probably minimum type price range, maybe a little bit below that. But I have heard a lot that in that upper market, 1.5 to 3, there's some very successful flippers right now, but also that market is hot. Like for some reason, I think there may be some out of town money moving in from some of these areas where we're talking about maybe California or the East Coast, where homes cost so much more, so they have a little bit less of I don't know, a sticker shock, because the homes are so much bigger and the neighborhoods are so much better for a 1.5 to 2.5 or $3 million range, that they seem to be bidding up the market. People here locally have been getting beat out a lot. So I thought that was an interesting tidbit as well.
yeah, I think that segment above 1.2 is like 10% up year over year, which seems like a lot, but I mean, it is a lot
That's
numbers
a,
wise. Yeah.
a lot. 10%, whenever you look at the rest of the market, is not, right? The rest of the market is relatively flat. To say it's up 10%, that's a significant number in a year.
Yeah, I think our appreciation is only at like 2% right now, 1.5, 2% in median. So, I mean, just from a 10,000 foot bird's eye view, I'm paying specific attention to whenever we're trying to price properties. And if you're an investor, pay specific attention to, there's a lot of new build product on the market in the suburbs. So if you're planning on flipping in that area in the direct vicinity, try to make sure that you're competing and you're undercutting those new builds if you're putting a flip product on the market, or just be aware of that new build product, because there's still going to be the neighborhoods that are desirable to live in, that people want to live in because of mature trees and everything like that, better school districts. But if you're competing against a new build product and your Katie's, your Cypress, you just have to be aware of it and make sure that you're pricing it correctly.
I think that's one big thing. If you're going to try and compete with those properties, I think you do have to make sure that you're really putting out something that is on par with that at minimum. Like it can't be half-assing the rehab. It really has to be a premium product. But I'm noticing that the mature trees thing is not very common in those new construction areas. They're scraping everything, and so there are people who really value that, to have that more mature tree, just more.
Line of the street. Yeah.
Yeah, varied houses, less track build homes. So I do think you can compete if you're putting out a premium product in those areas, even if you're doing a flip. Anything else jumping out at you, Jeff, in Houston?
Yeah, I was just a couple of things that you guys said. It's funny. I talked to a guy that we work with pretty closely, and he's very in tune with the market. And he was talking about how he was looking at 2 or 3 flips, and they were all very high end, like ARVs north of a million or right below that number. And he said he got beat out. and he's been beat out a lot. So I do think there's a lot of competition at a higher market to get him. Like you can't even buy him. So I do think there's a lot of competition on the upper band. Also, like to your point, like if you just look at the numbers, it's super flat. Everything is
Hmm.
pretty steady. The sales relative to the listings is almost identical. Like it's extremely similar this year versus last year. The one thing that and to this kind of goes to what you were saying, I looked at like the last month, and I know things are seasonal, um, but the average price this month versus last in Houston was almost $20,000 higher, I believe, than last month, but the median was flat. So with that kind of leads credence to your theory that the high end stuff is moving well, but the rest of the market is just kind of flat. So it gives you opportunities to. It's good for a buyer. There's pockets where you can get in and get deals, but there's also a healthy sale market for flippers. So it's very, I guess, neighborhood or area driven, like you were saying. But there's money to be made out there. You just gotta find the right buys.
Yeah.
Yeah.
I think the average absorption right now, you can see the months of inventory is 5. The average is 5 months. So anywhere between 5 and 6 months is typically, it's a healthy market. It's really, I know I've said it before and hammer it home. If you take one thing from this, if you listen to me about one thing, please it's about pricing the product the right way. Because that will dictate, price the product the right way, use the correct photos, make sure that you've went over your checklist before you put it on the market, and it will sell between 30 and 60 days on average every time. Make sure you're using the most recent comps. One of the things that I really pay attention to, like metric wise, is what is a percentage of sales price to the list price, and it's been stuck at about like 94 to 96%, meaning that if you list it for 100, it sells at 94 to 96,000, right?
Hmm.
And it's actually compressed a little bit, and it's up to about 98.5 right now, which
It's
means
interesting.
that agents are becoming more, either some accurate stuff's coming on the market, or agents are pricing things a little bit or coming around to where the market is at. And it's a good place to be in right now, to pick and choose where you're at. We're insulated here, so it's nice.
Yeah. I was actually talking with a person who does some high-end flips. I was at this NPLA conference. A lot of investors were there, also a lot of brokers, but talking with a guy who does some high-end flips in Houston. He actually said something I'm talking much higher than a million, like in the upper range, two to
Yeah.
three. And he was saying something that was very interesting to me, that you get to a certain point where schools don't matter as much because everybody puts their kids into private schools. Like there's some neighborhoods where the schools, it's not really that relevant. Fantastic areas, great homes, great trees, everything's every home on the street is fantastic, but the school district is not a great school district. Like there's some areas in Tanglewood and some other areas that the schools are not as important in that range, but they're $2 to $3 million homes, and everybody's sending their kids to private school anyway. So that's one interesting thing that I thought I might pass on. If you're looking at doing something on the real high end, probably not as big of a deal. I think probably below a million, it's a much bigger deal because the people may not have enough money to send 3 kids to a private school and to afford a home like that. So it's just a little bit of a different dynamic. Anyway, anything else in Houston before we jump over to Dallas? Okay, let's jump into Dallas. Jeff, what do you see there?
So Dallas is pretty flat. There's not a lot of change. Again, you talking about absorption, the months of inventory, but also the sales relative to active listings. That hasn't changed almost at all year over year. So it's very stabilizing. Um, the average price is up 10 grand, right? Month over month. I'm sorry, year over year. Same with month over month. It is telling me that, if you're a flipper, there is a lot to be said for when your properties hit the market. I don't think there's any real reason why it's going to change that significantly month over month. And in every market, just about, I'm seeing significant price increases in May. Rent. I was a little surprised that rents were down in Dallas a little bit. That was
Hmm.
one thing I did notice. Um, and you were talking about absorption. I was looking it up because it's a straight percentage sales relative to listings. And I think and Dallas is the highest by a mile. Dallas is almost 30%, which technically is a seller's market according to the interwebs. But things are moving pretty quickly in Dallas. You're talking to wholesalers up there. They're talking. They have a lot of flippers. It's very stable. It's very predictable. It's so when the market's predictable, in my opinion, you really just focus on like your ability to execute, right? Are you buying it right? Are you properly rehabbing for the market? And then, like Derek was saying last time, are you pricing it appropriately? Because so I know you're looking at like Houston was getting closer to 100%. Um, there's a lot of parts of the country where they are still offering massive discounts and concessions. So you just kind of have to be careful and know what you're doing because the longer those things, I've seen so many times agents will say, yeah, we're going to shoot for the moon. And it just sits and sits and sits and it never sells. And you eventually have to drop the price because people think something's wrong with the house. So, um, as far as overall analysis, Dallas is pretty flat, more of the same. Um, not a lot, not a lot of change, to be honest.
I think if you're looking at the numbers, that things are moving a little bit quicker than in Houston.
Yeah.
Your median sales price looks like it's about $80,000 higher than where we're at right now. Just a little bit higher. The income's a little bit higher up in Dallas as well on average. So days on market are their months of inventory. Wow, the 4%. That's definitely leaning towards this. 4.3 months is definitely leaning towards a seller's market for sure. But I think it just goes back to like you have to look at the type of market you're in. If you're flipping in a seller's market, you can shoot for the moon possibly. If you're flipping like in Houston or San Antonio, as we'll get to, you have to make sure it's a good product, and you can't shoot for the moon unless you have a product that is worth the moon, meaning that it stands out or it's better materials or something like you might be able to get lucky, but it's also risky to overprice it. So
For sure.
So,
One last thing I'll mention is just the difference in the average sales price increase from that pre-COVID number, which we always like to keep an eye at because there's, for those of you that don't know, a massive amount of appreciation in that COVID era. But if you look at Dallas versus Houston, Dallas is 50% higher on the appreciation number, 40 versus 60. That's a huge increase over that time frame in Dallas. So it's still one of the fastest growing markets in the country, and including certainly blowing everybody away in the state of Texas. All right, let's go to that San Antonio slide. And San Antonio is more similar to Houston in many ways, just as far as it being a really good rental market throughout. Dallas and Austin are tougher to have solid opportunities in the single family market unless you go a good bit farther out. But Houston and San Antonio still have a lot of those closer into the city. And San Antonio as a whole, you can see definitely the months of inventory and the days on market are slower than most. But there was a real positive trend there in San Antonio, and both median and average sales price for, I don't know, maybe 6 months, it was the highest. But it did pull back a little bit this last month, flat on average and down 3% on median. I'm wondering if those days on market and months of inventory are starting to, have a little bit of impact there because it was odd that they had the most appreciation, but the highest days on market, highest months
yeah,
of inventory for a while. That seemed like a little bit of an odd data set for them. But I do think whenever we get to the last slide, which we always cover, which is the least expensive markets and the most expensive markets, the affordability index, San Antonio is still extremely affordable. Their average income relative to Houston is almost identical, but they have significantly less expensive homes relative to Houston. So I still think there's a lot of upside there. You guys ever do any deals over there in San Antonio, Derek?
some owner finance type of stuff, yeah. It's a good product over there for, the sub 1,700 square foot houses, 3 1s, convert the garage, that type of stuff. It's
Hmm.
a, it's a very safe, insulated market if you can find similar areas to your Pasadenas in Houston, your some Southwest areas, some Baytown type of price points, stuff like that.
Yeah, a little bit more blue collar areas that are fantastic for rentals and owner finance for sure. Jeff, you seen anything jumping out in San Antonio?
Well, I mean, I just keep thinking the fundamentals in San Antonio are so strong. And there's an article, I don't know if we cover it in this one or not, or if I just read the article, but like San Antonio is super attractive for investors. There's a lot of really strong fundamentals. You can do flips, you can do rentals. I'm not quite sure, to be honest, why the months of inventory and days on market are so high. Um, but I think the long term prognosis for San Antonio is buy some properties and hold on to it for a while because, like I said, it doesn't make sense to me the 83 and the 6, but the long term fundamentals are extremely strong in San Antonio. The economy, everything that you look for a market where you're going to buy a house, San Antonio is it.
I think it follows very similarly. If you're looking at correlation, I can just speak on Houston's, like in that sub 300K price point, you have a lot of differentiation between, you have a lot of choices to choose from. And unfortunately, that price point is heavily influenced by either sellers' expectations being too high or realtors listing the properties too high. And then you have, active flips coming onto the market that will sell very quickly, that are priced attractively, um, because the available, the inventory that you can get in there, you can force appreciate it and sell it. So those, I would be very curious to look in deep dive into their numbers, but I definitely think it has a lot to do with, unfortunately, influenced by the sellers and the agents in that lower price point is
Hmm.
affecting the days on.
Makes sense. That's a good theory there for sure. Let's pop over to Austin. The next slide. Austin was definitely trending up on the days on market and months of inventory, but it's pulling back down to where close to where Houston and Dallas are, a little bit more attractive range in San Antonio. Um, it did have the biggest run up of arguably any city in the country during COVID. And then there's definitely been a pullback over time. A lot more properties on the market than back during the heyday, for sure, like double a significant number. But it is pulling down from where it was in May of 2025.
Yeah.
A good bit less inventory on the market and less months of inventory. Days on market is a little bit higher, but a lot of positive trends going on there. And I still see whenever you look at national prognosticators talking a lot about San Antonio and Austin as being really good markets for a lot of reasons. Tech companies moving in there. So I think there's a lot of positives in the future for Austin. It's just a very different market. The good news is there's a lot of duplexes, triplexes, and quadplexes that can be a very good investor source for mom and pop investors. It's hard to find a lot of single families there unless you go a good ways out. But I know a lot of successful 2 to 4 unit investors over there that really crush it, and flippers, of course, as well.
That build to rent and build to, I mean, we need inventory in a lot of those areas. If you flipped a bunch of properties and you can get your systems down for the new builds, it's definitely the time. In Houston, we're moving a lot of lots. We're getting a lot of that new build inventory, and those duplex areas, South Houston and stuff. If you can systematize that, it's definitely a route to go for sure.
For sure. Yep. And we are very close to rolling out our new construction products. So everybody keep an eye out for that. That's going to be in the not too distant future. We'll be able to do those for folks as well. All right. Next slide. Jeff, what did you see on this one? The Texas employment forecast. Pretty interesting info here.
Yeah, so the Fed's forecasting Texas employment will increase 1.8%. Really what it's talking, the tenor of the article was that it's actually down a little bit relative to what they were expecting. A lot of the jobs reduced by the immigration tightening and automation, I thought was something also, is like the increased productivity and automation. they're less likely to be hiring new folks. So don't get me wrong, Texas is still a great place for jobs and the economy is strong, but the tenor of the article is that it's it's going to be at the lower end of the projections when it comes to the job market relative to what they thought is what it is.
Yeah, I think that's a reasonable thought. There's going to be a lot more efficiency. People with AI should be able to accomplish more as a
Yeah.
individual and as a company with less. That said, relative to other markets, I think the Texas forecast is still very strong because of all the
Oh yeah.
companies moving to the area. But yes, there were some very high estimates early on there. So some
Yeah.
coming back to a little bit more reasonable expectation make a lot of sense.
Yeah. To your point, though, at the bottom, you were talking earlier about new construction. That is one of the better segments of the job market is new construction for sure.
Yep. Anything jumping out here, Derek?
No,
Hmm.
I think
All
it's,
right.
I'm wondering what the political landscape in the next few years, how it's going to affect us. But I, I've had a lot of friends back in the Northeast that are looking for jobs and stuff, just what I've seen. So I've noticed that a little bit more. I'm glad to be in Texas.
Yeah, for sure.
Yeah.
Uh, all right. So this next slide, um, labor markets and home prices, and this is doing a good job of looking at the hiring rate and how it compares to the home price appreciation. Jeff, what did you see here?
So it's probably I think we talked about this in the last slide, but it's just kind of it shows how the hiring rate of the economy really kind of leads the housing expectations and a house price index. But it as if you look at it overall at the bottom there, um, it is really I never really put the two and two together, but the job market and the housing market, if you look at that graph, they line up really, really well together. So as job market goes up or down, it's just kind of a good indicator of the housing market and housing prices. So like I said, I think we talked about this last slide, but it's pretty interesting how they move in tandem like that. I don't know if anyone ever looks at the labor markets to decide, okay, this is a good market or not to buy a house, but it definitely
I mean,
is a
yeah,
big
it's
is a big deal.
definitely
Yeah,
something. If you can't price it out, you're like, hey, I think about moving a year from now, and you're like, oh wow, the hiring rate's increasing. Might be
yeah,
good to wait a little bit for sure.
yeah.
On a side note, just talking about home prices and where things are going, and Derek, you brought up the you know governmental situation, like which way the wind blows, which party may be in charge. But there was a bill that got a lot of positive momentum that seems like it may help out a little bit with home price. I don't know if you heard about that, but it's considering, I think Trump is not proving at the moment because the Save America Act thing, he's trying to hold off for that. But nonetheless, I think it has some momentum, and I do think that there's some things that are interesting in there for the build to rent crowd. I think that there's something in there that had bipartisan support that said if you build homes for build to rent, you do have to sell it after 7 years if you're doing that structurally, and give the tenants a first right of purchase, which I thought was interesting. So that's something to keep in mind for the build to rent crowd. That's not finalized yet, but that is in proposal. But the most exciting part of it probably was a national loosening of standards for environmental review processes and a lot of the regulations that are out there.
Yeah,
Probably won't have as big of an impact in Texas, but it could have impacts in other parts of the country where that's really gridlocked. So I thought that
Yep.
there were some positives in there that might give a little bit of home price relief. So everybody, if you're planning on doing build to rent or some other categories, it's something to be aware of.
I definitely think that there is I know in Houston, we're pretty lax on our some relatively lax on the standards, but I think if we could work on that process of getting that pushed through the pipeline of, getting your approvals and permits and stuff like that, it would only help stuff. I mean, you have a delicate balance about, putting an unsafe thing onto the market, but I know from experience that, it shouldn't take 3 weeks, something just sitting there to get
Right.
pressed a button to review something. You should be able to, get that stuff on the market quicker. And I think also they're talking about maybe I know it's not necessarily directly relevant, but like capping increases here for the taxes and then increasing the homestead, the national homestead exemption amount too. I don't know if that already passed or that, but that would be nice.
Yeah, I
Wasn't
think
there?
well, I think they may have passed the one on the even the non-owner occupied maximum increases year over year. I think there's something in there now for like maybe
It's
a
10%, or I don't know if they're lowering it or whatever, but I mean, from someone whose house's value and mine increased 22% year over year, and I'm like, goodness gracious.
yeah, yeah, yeah.
Wasn't,
Yeah,
wasn't there
there's
something in the bill that would limit the number of homes that basically a hedge fund can own and buy? Wasn't that
Yeah.
part of the bill? Yeah.
yes, that is too. Right. Which honestly makes a lot of sense too. I think, most investors right now are mom and pop investors, but there was a lot of big institutional money coming into that market. But still, I don't think it ever got above 8% of the total market, even though it sounds like a huge number. And if it continued unchecked, it could have become a bigger problem over time for sure.
Yeah.
All right. This next slide is on the Texas job growth versus the national job growth. And as you can see, like pretty consistently, Texas is above. There's a little blip back up there during I guess, 2021, 2022, where Texas was a little bit below. But, we were talking a little bit earlier about the employment projections for Texas not being as big as they were before. But pretty interesting that consistently it is outperforming uh, the national averages. And whenever it doesn't look like there's a big gap between those lines, but sometimes the difference between, this looks like 4 and 6% sometimes, or something like that. That's a pretty profound difference whenever you look at, the difference between 4 and 6% is actually 50% higher if you have that delta.
Like you were saying earlier, Derek, your buddies in the Northeast finding jobs relative to being in Texas, it's a little more difficult up there.
Yeah, I don't know if I just like necessarily noticed it, but it's been, rampant the last 6 months or so. So it's unfortunate.
Yeah. Okay. This slide has a lot of action. There's a lot of information here, but I thought this was one of the best slides Marusha on our marketing team has found lately. So, um, it's talking about house price growth and mortgage rates through 2026, and I thought it was interesting because we often talk about how Texas and then Austin, Dallas, and Houston and San Antonio kind of compare, but it's the first time I've seen it on one slide, so it's pretty interesting. And you can see what we talked about with Austin there, right? How it just crushed every other city. That's the kind of the orange line, I guess. Just blew
Yeah.
away everybody else during that COVID era, kind of flattened out, and then just fell like an absolute. I mean, just look at that, like a huge cliff. Whereas, Dallas had this. It grew a little bit later, and I distinctly remember that. There came a point where I remember we always compare that pre-COVID number, and we're like, oh man, Austin has fallen below Dallas now, and then it just continued to plummet and really came down just huge. And Dallas, if you look at really Dallas, Houston, and San Antonio, never went that far down, never had that type of huge drop that going to below that 0% number like Austin had. But then also looking at this, whenever you look at the United States as a whole, and interesting at the moment that United States as a whole has a little bit higher appreciation than Texas does at the moment. And I do think a huge part of that is inventory, right? We just had the ability to build new construction so much more easily. I was actually at a conference 2 conferences ago with some people on our long-term lending side, and they were talking about how difficult it is to build a property in California. In fact, one of the people that Jeff knows really well is an interesting story. She bought a property that was zoned residential, clearly, like everything said residential, but then they decided to not let her build or not let her use it as an Airbnb. It was zoned residential, and it was zoned to be able to use it as an Airbnb, and they refused to give her the license to do it. And she's just kind of had that property unable to rent for a really long time frame. Like we're talking years now. So
Wow.
just a really, really interesting situation. It was Lindsay. So yeah, just kind of
Yeah.
crazy that he hasn't been able to do that. Anything else jumping out on this slide, guys?
I'm just curious. Oh, go ahead. I'm sorry.
Let's say the mortgage spread at the bottom there. The difference between the rates and the 10-year, 200 basis points, um, is pretty high.
Yeah, it's
So
historically high, and it has been for a while,
yeah,
right?
yeah, yeah. So I think, I was looking at it, if you would have, I guess when I see this, I think to myself, don't try, people who try to predict rates or predict markets, I think it's a fool's errand. I really think if you just look at real estate as a class, don't try and quote unquote time it, because a year ago, if you would have said the betting favorite is that rates are going to go up as opposed to down, I would have said you're crazy. But if you look at the betting markets now, it's the I think it's almost surely not going to change in the meeting that's coming up in a couple of days. But rates going up versus rates going down is significantly higher. The betting market on them going up, like nobody's betting on them going down right now.
Right.
So, but if you would have asked us a year ago, oh yeah, probably going to go down, right? Because that's what Trump was pushing. So, I guess my point is, you never know. But if you just
Yeah.
look at real estate as an asset class, like, hey, this is a good asset. I'm going to just consistently buy, time it, whatever you want to do. But don't try and, when I say time it, meaning like just buying intervals, just consistently buy good properties, like Derek was saying. Um, that's the best bet, because people that were sitting around saying, okay, I'm going to wait until rates drop. Well, like 2 years has gone by maybe, and you haven't bought a property, and I don't know when they're going to drop. Who knows? But you've missed out on 2 years of being able to buy properties from guys like Derek.
It's you have to touch on that. Like, if you put a property on the market and you've done everything right and it's a clean product, if you have to take a $10,000 price reduction because you overpriced it or you didn't buy right or whatever it is, that offsets your interest rates right there significantly, the buyer's power, everything. So timing it isn't as important as pricing it the right way. Then looking at this graph, I'm curious that you mentioned Austin spiked. I would put money on that spiked because Austin's so heavily tech, and
Mhm.
those guys were working remotely, and that interest rate dropped, and the guys are like, I can get a house now. My job's not impacted. COVID's active right now. And then as soon as the rates drop, they're inversely affected to the average person, because once rates raise, and if you're making $150,000, once rates raise, your ability to buy that, $400,000, $500,000 house in Austin's dropped significantly. Um,
Yeah.
Definitely think that that's it. And then I'm also curious if people are betting that the rates are going to rise, but hopefully the Iran war finalizes. Like, that I know the gas prices are stabilizing. I would be surprised if it rises from,
Yeah. Well, the what I read was that um, inflation has got a pretty strong hold still, right? And the labor market's good, so they don't really see that like dropping it would just make inflation worse. They don't really feel the need to drop rates because the labor market's strong. But if they can get inflation under control, then yeah, maybe rates will go back down. But right now it seems pretty sticky. And maybe because it was the war, maybe that was like
I
a
think that I think inflation was a large part of the control before the war.
yeah,
I
yeah,
think it
yeah,
was,
for sure.
it taking a big drop, but we'll see. I mean, I think it may come down a bit, but to your point, as long as the labor market stays strong, there may not be a huge incentive to reduce it. Jeff, you touched on this earlier. One thing to keep in mind for real estate investors or people looking at buying a home in general is that spread is really big. So the Fed would not have to lower the overnight lending rate in order to have a reduction in interest rates, right?
Correct.
It would just mean that those spreads, which are well above typical levels at the moment, historically, very high, pull down. Instead of being 200 basis points, maybe it comes down to 175 or 150. Those are profound differences, right?
Yep.
So I think that could be a big game changer as well.
That's a great point. Like maybe some of the war is keeping, maybe that's because if you look down at that bottom paragraph, it says where is it? I mean, lenders are pricing in more risk and volatility. So I think maybe if just conditions settle down a little bit, even if the Fed does nothing, hopefully the spreads will start dropping a little bit.
Yeah, for sure. All right. Uh, Next slide here. This is an interesting one. Derek, did you have a chance to review this one? Anything jumping out on this one?
Inventories rising, increase all markets, slow down, easy gains from home appreciation, rising on successful investment. Yeah, I mean, I think the three takeaways that I was looking at is that like I said at the beginning, it's heavily area specific, paying attention to your local, like the new build competition, and then just overall, it's just picking and choosing what type of property you have a lot of selection as an investor right now, just making sure you're buying right.
Jeff, anything jump out in this data?
No, I think there was something that kind of this slide triggered me to think about was the basically the concessions and how market driven it is. Like there are certain markets where concessions the buyers have a lot more leverage in markets where the concessions are in the 50s and 60s, but there are certain markets like New York, like where there's no concessions. So like I think a lot of this stuff is just boiling down to, if you're going to be an investor, you just have to get the fundamentals right. Don't try to predict anything. Buy right, put up a good product, price it right, and you're going to do well.
Yep.
Seems so simple, right?
What are you doing?
All right, this next slide, keys to the housing market for the rest of 2026. There's some interesting points here that it does feel like people, I've been feeling this for a little while. People are starting to settle into the new rate environment. There's a lot of recency impact, like right whenever rates go up from those COVID lows to, people are getting houses 2.75, 3% owner occupied, just ridiculous rates, historically incredibly low. And now it's back up to a more normalized market. We'll show that chart a little bit. I mean, rates are still historically low, but just not as low as they were before. And people are starting to accept, okay, if I want to buy a house or if I want to get a bigger house, waiting on lower rates. I've been waiting on it for several years now, maybe almost 3 years, and it's still not happening. I think it's starting to become more normalized. So I think that's a big part of what people are going to do in 2026. And then, Derek, you mentioned this multiple times. Real estate has become hyper local, and even beyond just saying Houston, right? It's like all these pockets are just really specific. And to your point, the savvy investors, I think sometimes it's limiting to say I'm only going to invest in one area. You might have to be a little bit more broad than that. I think it's important, especially if you're to buy and hold investor, to not just say I'm going to invest in one area, but you do have to understand your markets. That's really important, because in order to be a competitive buyer, you can't underbid because you're not going to win the deals. But I think just really understanding your markets, constantly studying. If you want to be a successful investor, it's important that you're spending some time learning about your market so that you can be the best possible buyer out there. That's super important.
Pay attention to the most recent comps too. Like if you're looking at two different properties and something just sold last month, and then you go back 6 months and you're looking at another thing, just put more weight on, if it's apples to apples and one sold for 200 and one sold for 190, and the 200 one's more recent, of course you put more weight on that. But if it's reversed, and you're going, well, I think I can get 200 and it's a little bit older, but the more recent one got 190, just make sure you run your, I personally would run my numbers based on that. If everything's equal. Now, if you really get granular on a lot of that stuff in Houston, Texas, a lot of different areas, there's usually a reason why something dropped in value. And you have to kind of look at that as an overall thing. Maybe there's more inventory now. Maybe it wasn't as nice of a product. Maybe it was located in a different area. And so just, try to hyper locate, within a mile in the same area. You mentioned it, school zones is very important. Wade, for, under 500K in Houston in the different areas, it's very important. Make sure that you're staying in the same school districts and stuff. So.
That's a big thing we see investors make mistakes on is they try to go a little farther out on their comps than they should without being aware of the elementary school, without being aware of the other schools. And there's reasons sometimes they're like, well, this comp's, within a mile and a half, but all the homes in that neighborhood are getting capped out at this point, 200, 250, whatever it is. And they're like, why is this other one not getting it? Sometimes it is the schools. At that price point, people don't send their kids to private schools. So they make decisions based on schools a lot more at that level, for sure.
It's crazy on a macro scale if you look at enough. If you look at the amount of like if you do the amount of comping that I do, and you see patterns, and things do not deviate unless something is different about the property, or the property itself is a detriment or way nicer than something else. Like those outliers are few and far between. And if they are an outlier, what I mean by like selling 20% more, 15% more than the rest of the market, there is something different about that one. So just make sure you pay attention to that.
100%. Yeah. This next slide is interesting. Focus on San Antonio. So I like this slide a lot. And it's very interesting where people are moving from. A lot of it's not that surprising. Some of the higher price markets in the different coastal areas. And there's a lot of people moving to Texas and to Florida, but Florida is a much higher price point than Texas. So you even see some people moving from Florida as well. But definitely strong population growth and job growth there, and I think it's becoming more diversified too. San Antonio for a long time was really in large part military jobs drove a lot of that, but I think it's becoming a lot more diversified. There's some larger companies moving headquarters there, so definitely some interesting stuff going on in San Antonio. Anything else jumping out there, guys?
Just like I was saying earlier, San Antonio, if you look at that little bottom slide there, San Antonio, strong population, job growth, like it supports a good long-term picture. So, as long as you're using your fundamentals and kind of taking the advice that Derek gave about making sure you're comping the properties right and buying them right, rehabbing them right, like it is a good market to buy and hold in for sure.
Yeah. Next slide. Interested in Derek. I know you're based here in Houston, as are we, but you have a lot of info on what's going on here. But what a really impressive slide here, right on
Number
Houston.
2. Yeah, this is. I mean, this is kind of what we were talking. This is part of what we were talking about. The
I don't
job
know.
growth.
I don't know if y'all have tried to drive from one end of Houston to the other end of Houston, but the hour and a half that it takes me sometimes whenever I'm going to appointments just tells you the scale of where we're at in the city. And I try to explain to my friends who don't live here, and they're like, well, this is surely not Houston. I'm like, no, it's an hour and a half from one end to the other end, guys. It's Dallas, and everything is bigger in Texas, to be honest with you. So
Yeah. Yeah, and it doesn't matter if you're going north to south, east to west. I mean, maybe it doesn't go out quite as far east, but like in the north, south, and west, the city goes so far out now. Like really, like the Woodlands premier area. Katie's a premier area. You got Pearland, Sugarland, Clear Lake along the south. Like just
what
expensive.
what is what does that mean though? That just means that there's so much more opportunity for you as an investor to, you live in Missouri City, you can just live your entire life flipping hundreds of homes in Missouri City.
Right.
My wife and I were in Maine last weekend, and I was just like looking up the stats and that, and the greater metropolitan area in Portland where we were at, it was was smaller than Missouri cities. And
Wow.
and we're like, that is, it's the scale of what the opportunity, if you live in Houston, if you live in San Antonio, Dallas, it's massive compared to everywhere else. There's so many different houses in so many different neighborhoods, so many people moving here, so many people, it's a strong job market. It's really exciting, and I'm really happy to be in Texas for sure.
Just think about what living in Houston. You keep going west on I-10. There's land for days.
Oh, it's going to be connected to Sealy eventually.
I'm just saying, like, if you just think about the conditions, we have a lot of major companies coming here. You have land forever, north and west, especially, and very low regulations. I mean, it's a perfect environment to just keep growing and adding people. So to your point, Derek, it'll probably take you, 20 years from now, it'll maybe take you 3 hours to get from one side of the city to the next. Because I don't really see any reason to stop anytime soon.
And the exciting part too is there was a lot of, building activity in the early 2000s for San Antonio, Dallas, and Houston. So those neighborhoods are going to be aging out to the point where they become readily available for flippers in the next
It flips.
So, and so that's just going to create more opportunities of cleaner products to either keep as rentals and flip quickly. It's an exciting time.
Yep.
A couple other things on this slide. Like, I don't know if I just had a misconception, but I really thought that Dallas was either equal or greater in Fortune 500 companies in my mind.
I did too.
I should know that.
I did too.
I
But
think like Dallas Fort Worth though, or is it just Dallas?
I don't know if Fort Worth is peeled
I don't
out.
know.
Very good question. We could double check that. But
Actually, you know what?
greater metro area. Jeff, you could probably look it up real quick.
The
But I
next
thought
slide. No, look at I think hit the next slide. I think the answer's right there. Yeah. So this is not just Dallas. Like there's Irving, Arlington, Westlake. I mean,
That's crazy. Like,
This is not just Dallas. This is the whole thing, right?
yeah, I would not have guessed that. The other thing though, the revenue. I mean, the 1.248.
Yeah.
That is just a massive number relative to Dallas. San Jose has a beat. That's a lot because it's a tech. That's the tech center right there, but for a few companies. Another interesting thing I heard, I was listening to an article talking about New York and the flight from there. But one of the interesting things about not showing any year-over-year change is that a lot of those companies like Goldman Sachs, other huge companies that have been a part of New York forever, they may not be moving out their headquarters, but they're moving 50% of their staff, 75, there's massive amounts of their staff. They're trying to keep a flagship there, but they're moving out the large majority of their group, their team, whenever in the past 100% of their team was there, right? So, and you just wonder how long that might continue. Like, is there going to come a point where they're just like, there's so many negatives here that we're going to move the entirety out. Another interesting thing that's I don't know if you guys saw this, but there is like an equivalent of Wall Street or in Dallas now. I don't know if you guys heard about that. But
I've heard about it. I don't know much about it, but I have heard about it. Yeah. Well, tell me. What's
I mean, I don't know that much about it, but there is a competitor there in Dallas that's trying to reposition itself as the place to be for that type of trading. So just another interesting tidbit. Anything else jumping out before we move from this page?
No.
The last thing I mentioned, 6 Fortune 500 companies have moved since 2020. And it's a big deal for these companies to move. Just think about how many employees a Fortune 500 company has, right? That is a lot of people to move around. Massive cost for relocation, right? Massive, like just huge cost, because it's not just moving the building itself. Whenever you move something like that, you're offering a package to a significant amount of people to move, right? Big packages to move their families. So the fact that many have moved, that's a very positive number for sure. All right. Yeah, Jeff, you're right on this slide. You want to deep dive this one before anything else on Dallas before we move to the next one?
No,
Okay.
no. Waller County, which is right by my crib, the county over was the second fastest growing county in the United States.
Wow.
10 counties that grew the fastest in 2025. 4 of them were in Texas: Waller, Kaufman, Liberty, and Caldwell. It just that's my point. You can grow for days. There's so much cheap, untapped land that is, well, I don't like driving 2 hours across the city, Derek. It's, you could, with a lot of folks working from home, you can get close enough to work. And a lot of the jobs are not downtown anymore. Like if you look at Houston, the center of Houston, population wise, I'm not exactly sure where it is, but I know it's significantly west of downtown. It might even be west of the Loop. So, to get to jobs, there's still plenty of room north and west to to work and live. And that's why these counties are growing, because they are on the outskirts. You can build. Um, it's just this is what we're
Right.
talking about.
And Jeff, I know like even the Houston Texans moved right out into your area, right?
Yeah,
They moved their
yeah,
practice facility and like their headquarters. So
yeah.
just a huge facility being moved out there, a lot of infrastructure, big commercial development, hotels, everything, regional healthcare. So that's
Yep.
pretty interesting. That I know that had probably a factor in that being one of the fastest growing
We're
counties as
fighting
well.
to get an NHL expansion team as
I
well.
hope so.
Mhm.
Are
Yeah.
we getting one, or are they just are they
They're
talking about
fighting.
it?
They're putting their bids in and stuff for. I think they're trying to get either two or three more expansion teams, and we're putting our name in the hat. So
Okay.
All right. Just a couple more slides. We're at 12:55. This one is talking about holding on to cash, how people are wanting to put less down, right? Makes sense. Rates are higher, home prices are higher. So there is a trend towards the down payment coming down from 16% to 15% year over year. Not surprising there. Um, and then,
I noticed a few. One of the other things was a lot more. They were more, I guess, low down payment programs as well, like
yes,
lending
trying to fill
programs
that need.
getting a little more aggressive, because
DHA, the FHA raising their rate like minimum that or maximum really helped out as
Yes.
well.
Mhm. Very true. Last slide out of the ones we don't do every month. This one, Jeff, what do you see here?
so this is what I was talking about. Like 40% of home sellers gave concessions to buyers in May, the highest share on record for that month. So nationwide, sellers are offering concessions at record levels. Um, so it was very very market driven. So nationwide 46, that's a big number, obviously, but you just got to look at your market, because certain areas of the country are way north of this, and certain areas are in the single digits. So, yeah,
Something I do want to mention on this, because I do this all the time. If you are flipping a house and people are expecting these concessions now, there's nothing wrong with maybe you get an offer on a house, countering them above list and still giving them the concession, because most of the home buyers are more concerned about getting that concession to help with their closing costs than the overall cost of the loan itself. So
Right.
that can be a savvy way to maybe get some, you need a new roof and it's listed at $100,000. Maybe say, hey, if you pay 107 for it, we'll give you a $7,000 concession instead of that $7,000 coming off of it. If they're approved for that amount, they're just more concerned about getting that concession and getting whatever it is that they're trying to done, not necessarily for the mortgage if they want the house. So that can be a way to approach it.
Yeah, that's good. That's good technique. Um, we're right at the end here. I think the interest rate trend, you can see,
yeah.
right?
Skip the next one.
Yeah, skip the next one. Interest rate trend,
There we go.
the basically flat. But if you look at it historically, one thing I always like to show here, go back to 2000, we're still lower than everything up to 2000. Like the last 20 something years have been an anomaly. And we're really in line with every period other than 2010 to,
Really starting like 2010, honestly. Yeah, the last
uh,
15 years.
yep. Um, Last thing on this affordability index, we mentioned it earlier, but if you look at San Antonio, that's just a very interesting thing that the average income
Next
can.
slide, please.
Oh, I'm sorry.
No, that's all right. I don't know whoever. There we go.
Yep. San Antonio is right at Houston as far as the income, but the average home price is significantly different, right? Almost $85,000 less. So that's why San Antonio is the 70th uh, most or I guess least unaffordable, and Houston is 33rd. And you see, Dallas is really starting to trend up. Like Dallas is, not, if you look at the rankings, it was back in February 2025 last year. Dallas was 19, Austin 25, Houston 32. Now, uh, Dallas has actually moved up, less affordable. Austin's come down 4 spots, and Houston's come down one. So, and then San Antonio, San Antonio was 62, now it's uh, 70. So all the other cities are coming down, Dallas is kind of going the other direction. So that's a very interesting dynamic as well.
We always focus on, I was just looking at this, we always focus on the rankings of the cities, right? And not as much the percentages, because like to your point earlier, how the market is kind of stabilizing or normalizing, whatever you want to call it. Because I think everyone would say 2019, nothing was unique about that time. It was just a regular market. Look at, for example, Houston was 41%, right? So it's mortgage payment relative to income, 41%. It's 37% now. So yeah. It's technically more affordable now as a percentage of your income to buy a house relative to what it was in 2019. Now, if you look at 25 to 26, at least in Texas, I was looking at, it did get better, right? And 25, it was a little steeper. Houston, for example, 63K income, 360 value. Now the income went up and the prices went down. So it's becoming more affordable. But just compare it to what everyone considers just a regular market, 2019, it's more affordable in a lot of these places. So it is normalizing. Like this is, I don't think we're going to see massive swings getting cheaper anytime soon. Yeah. I don't know if what you guys think, but
no,
I was surprised by that.
Yeah, it is becoming more affordable. I think that has to do with the incomes going up more than it has in some of the
parts. But that matters, right? That matters.
Totally matters. Yep. Okay, we are right up against it. We might have time for one question, team, if we have one. If not, then we can just wrap up.
We have one question, but I think we're just going to add this information to our Metro slides next time. I see average lease price, but are median lease prices available for Houston, Dallas, etc.?
No, I think that information is not something that we're able to get. We're just kind of using the publicly available information. So that's not one. If it's available, we put it on the slide.
Yep.
Okay, well, let's wrap up here. Thank you, Marcia. We're going to let Derek just let everybody know how to reach him if they want to get some high quality off market deals. Derek, tell everybody that.
Yeah, you guys, Vicina Realty is the company. If you just want to go to vicinarealty.com, we have a web form. You fill it out. One of our agents will reach out to you directly. Just let us know the areas that you're looking in, buy box, price point, and if you're already on our list, or you're looking for other areas, or you're dealing with other wholesalers, we're just another source. So,
yep,
a good source. I highly recommend you reach out to these guys.
Very communicative. They have put out high quality deals. They're not trying to hit a home run on every deal. It's really relationship oriented. So if you haven't worked with them, I highly encourage it. Okay, everybody. Thank you. Have a good one. Thanks, Derek.
Thanks, Derek.
Thanks, guys.
Bye-bye.